Market turmoil and opportunity ahead. The markets are on edge as last week's hot inflation report and weak consumer sentiment sent stocks tumbling. With the S&P 500 facing pressure and President Trump set to unveil new reciprocal tariffs on April 2nd, volatility is spiking and investors are bracing for impact. In times of uncertainty, savvy traders turn to penny stocks low-priced, high-potential opportunities that can deliver explosive gains when the broader market struggles. While they carry risk, the right picks backed by strong financials and smart positioning could be hidden gems in a shaky economy. We're breaking down the top penny stocks to watch as we head into April 2025. From under-the-radar companies poised for growth to sectors benefiting from shifting economic trends, these picks could be your ticket to big opportunities in a turbulent market. But first, let's get this video to 500 likes to help get more visibility. Please share and subscribe to stay updated. Thank you. Let's get right into it. Gossamer Bio Incorporated, ticker GROSS. It's a clinical-stage biopharmaceutical company that focuses on developing and commercializing seralutinib for the treatment of pulmonary arterial hypertension, PAH, in the United States. The company is developing GB002, an inhaled, small molecule, platelet-derived growth factor receptor, or PDGFR, colony-stimulatin factor 1 receptor and CKIT inhibitor, which is in Phase 3 clinical trial for the treatment of PAH. The company remains focused on its lead asset, seralutinib, which is currently in Phase 3 registrational study for pulmonary arterial hypertension, PAH, with top-line data expected in Q4 2025. Additionally, Gossamer Bio Incorporated is preparing to launch a Phase 3 trial for pulmonary hypertension associated with interstitial lung disease, PH-ILD, in the second half of 2025. The company also received an orphan drug designation for the treatment of PAH in Japan, positioning it for potential global market expansion. The biotechnology sector is gaining new momentum with better market conditions, cutting-edge innovations, and growing investor attention. After a tough 2024, the industry is ready for major growth powered by developments in personalized medicine, AI-driven drug discovery, and rising demand for biologics. Markets reported that the global biotech market should grow from $483.0 billion in 2024 to $546.0 billion in 2025, reflecting a solid 13% increase. This growth shows the sector's resilience and future potential. A major factor in this upturn is the expected change in the Federal Reserve's interest rate policies. Biotech needs lots of capital for expensive R&D and clinical tests, making it sensitive to shifting rate trends. Genetic engineering and biotechnology news noted that lower rates increase capital availability, helping biotech companies extend operations, attract venture funds, and speed up drug development. Analysts think a rate cut could free up billions in sideline investment money for struggling new biotech companies seeking stable funding. For the full year ended December 31, 2024, Gossamer Bio Incorporated reported a net loss of $56.5 million, or 25 cents per share, a significant improvement compared to the $179.8 million net loss, or $1.18 per share in 2023. The company ended the year with $294.5 million in cash equivalents, and marketable securities, which it expects will fund operations through the first half of 2027. Research and development (R&D) expenses were $138.5 million, slightly higher than the previous year's $135.3 million, reflecting ongoing investments in clinical trials. Overall, GOS ranks well on our list of penny stocks with growth potential to watch. Moving on to the next pick, CBAK Energy Technology Incorporated, together with its subsidiaries, manufacture, commercialization, and distribution of lithium-ion high-power rechargeable batteries in mainland China, the United States, Europe, and internationally. The company operates in two segments, CBAK and hydrants. Its lithium batteries are used in various applications, including electric vehicles such as electric cars, electric buses, and hybrid electric cars and buses, light electric vehicles such as electric bicycles, electric motors, electric tricycles, and smaller-sized electric cars, and electric tools, energy storage, uninterruptible power supply, and other high-power applications, as well as cordless power tools. CBAK Energy operates in the booming energy storage and EV battery sector, which has strong domestic and international demand regardless of trade tensions. China remains the world's largest EV market, and CBAK supplies batteries to major automakers and industrial applications. Even if U.S. tariffs hit, China's internal growth provides a solid revenue base. CBAK has already established relationships with American firms, including a key deal with Walmart for energy storage solutions. Tariffs could push more localized production, benefiting companies like CBAK that have a U.S. foothold. As China pushes for energy independence, battery manufacturers receive heavy subsidies, insulating them from some tariff risks. While giants like CATL and BYD trade at premium valuations, CBAT remains a small-cap gem with massive upside if demand surges post-tariff announcements. CBAK reported revenue $176.6 million, down 14% from FY 2023. Looking ahead, revenue is forecast to grow 27% PA on average during the next 2 years, compared to an 8.1% growth forecast for the electrical industry in the U.S. Battery revenues in Q4 were roughly $34.1 million, which appears to be about 12% below our estimate of $38.9 million. However, we would note that the company's largest product line, uninterruptible supplies, likely generated the substantial majority of these revenues and were roughly in line with forecasts. Uninterruptible supplies accounted for $124 million of total revenue in 2024, flat versus 2023, despite industry-wide weakness, which speaks to the strong demand for the company's cylindrical cells and the strength of the company's customer relationships. It does appear as though light electric vehicle sales, mostly to two-wheeled scooter manufacturers, while nearly doubling to $10.3 million in 2024, underperformed our forecast in Q4 significantly. Since we are currently projecting robust growth in this business line by 2026, it will be important to monitor this business throughout 2025. Net income, $11.8 million, up from $2.45 million loss in FY 2023. Profit margin, 6.7%, up from net loss in FY 2023. The move to profitability was driven by lower expenses. EPS, 13 cents, up from $0.027 loss in FY 2023, signaling strong momentum. With a high short interest, any positive tariff-related news could trigger a rapid price surge. Hedge funds and ESG-focused investors are increasing positions in alternative energy plays like CBAT. If tariffs specifically target battery imports, CBAT could face short-term volatility. Larger players dominate the space, but KULR's niche and customized solutions gives it an edge. For those betting on the long-term energy storage boom, it's still necessary to consider the ever-present specter of investment risk and understanding it should be part of your investment process. CBAK Energy presents a high-risk, high-reward opportunity ahead of the next wave of trade policy shifts. The third pick on the list is KULR Technology Group, a penny stock with explosive potential in the EV and energy storage revolution. When it comes to investing in the future, few industries hold as much promise as renewable energy and electric vehicles (EVs). At the intersection of these two transformative sectors lies KULR Technology Group, ticker KULR, a cutting-edge company revolutionizing thermal management and energy storage solutions. With its innovative technologies, strategic partnerships, and exposure to high-growth markets, KULR is positioning itself as a key player in the global shift towards sustainability and electrification. Here's why this small-cap stock deserves your attention and potentially a spot in your portfolio. KULR specializes in developing advanced thermal management technologies that enhance the safety, efficiency, and longevity of energy storage systems. One of KULR's standout products is the KULR Tech Safe Case, a game-changing solution for safely transporting and storing lithium-ion batteries. This innovation addresses a critical need in industries heavily reliant on these power sources, further solidifying KULR's role as a problem solver in high-growth markets. KULR has secured partnerships with industry giants like NASA, Lockheed Martin, and Leidos, showcasing the credibility and applicability of its technology in high-stakes environments. These collaborations not only validate KULR's innovations, but also open doors to lucrative contracts in aerospace and defense. Additionally, the company is working with leading EV manufacturers and battery producers, positioning itself as a key supplier in the EV supply chain. With NASA and private space companies like SpaceX expanding their missions, KULR's lightweight thermal solutions are well-positioned to capture a share of this high-growth market. The aerospace sector's demand for reliable, efficient thermal management systems presents a significant opportunity for KULR. The global push for renewable energy will drive demand for efficient and safe energy storage systems. KULR's solutions are tailor-made for this market, creating a massive opportunity for the company to scale its operations. KULR has the potential to expand its footprint into international markets, particularly in Europe and Asia, where EV adoption and renewable energy initiatives are thriving. This global reach could further amplify its growth prospects. KULR Technology Group is more than just a penny stock. It's a forward-thinking company at the forefront of two of the most transformative industries of the 21st century. While it carries the inherent risks of a small-cap growth stock, its potential rewards are equally compelling. For investors with a long-term horizon and a tolerance for risk, KULR represents a unique opportunity to invest in the future of energy and transportation. Keep an eye on this one. It could be a game changer. If you're looking for a penny stock that is more promising than KULR, but that trades at less than 5 times its earnings, check out the next video.